What is going on, investors? Hopefully you guys having a What is going on, investors? Back again. Time to talk about the Boeing company, better known as Boeing, ticker symbol BA. Over the last year, this stock has been on a ascent upwards, up 88% year to date, up 13%. We're seeing, though, the stock trade off a little bit, about 3.7% during the regular session after reporting Q1 earnings, which a little bit mixed, and we'll talk about that in a second. And then we'll also jump into the stock chart. We are seeing that these shares have pulled back. They were at 270 like last month, okay? And now we've pulled back to 233. Is this creating a buying opportunity? We'll talk about that as well, because as you can see here, the highs for Boeing are about actually more than $100 where the stock is now. So you got some blue sky in front of this one if this trend can reverse. Now, we got the statement of operations for Boeing. We're going to go through the revenue, the profit. We're going to take a look at the backlog. We're going to take a look at cash flows because, as you know, commercial airlines have been under pressure. Air travel, especially for leisure and business, have been under pressure. And obviously, Boeing has had their own problems launching their new planes with all types of issues, some of them actually, unfortunately, very tragic as well. So we send our hearts and thoughts out to the people involved in those types of things. Now, last 3 months ended in March. Here's last year in 2020. Here's this year in 2021. Things have gotten better in terms of the health situation that we are dealing with, but we are seeing that sales of products are down from last year. We're at 14.1 billion. We're down to 12.5 billion. For sales of services, we're at 2.7 billion. That's about where we were last year. So that gives us a mix of total revenues down from, we'll call that 17 down to 15.22. Now, cost of products. Okay, this is a relatively low margin business. This is why when Boeing ran into some trouble, you saw the stock basically fall off a cliff, because it's a pretty low margin business, okay? And so if you start losing the business for really twofold, Boeing had two things going on at the same time. They lost the business of their new aircraft that they've been trying to launch, and then they lost business because of the health situation. It was an absolute double whammy on this stock. You see cost of products coming at 11.6. We spent 11.6 to make this 12.5, okay? So it's not a very high margin business, and then the services is basically there just to kind of support the sales of the products. So you got total costs and expenses coming in at 13,808, but we were profitable, okay? 13,808 minus 15.2 gives us $1.4 billion worth of operating profit, okay? That is gross. That is gross profit, okay? Last year we were profitable, just marginally, basically break even at 140 million. So we've grown that. I guess that's about tenfold. That is a good sign. And you could imagine the health situation gets behind us. Boeing can get their planes in the air, especially their new ones. Things could definitely turn around very quickly. Now, we've got other things going on here. We got general administrative, got research and development. Those costs coming in at about call that 1.5 billion and change. Guess what? That wipes out our gross profit. Now we've got a loss from operations coming in at 83 million, but it is much better than where we were a year ago. We lost $1.3 billion on this company. So they're essentially running kind of flat from an operation perspective. That's actually not bad. Okay. If Boeing can kind of, hang glide in the air, kind of taxi, so to speak, for a while, if they can kind of hang out, break even, not burn through a bunch of cash, get things turned around, well, then probably bluer skies and better things are ahead for this stock. Now, from a net loss perspective, it's not going to look good. Okay, you lost 92 cents per share. Last year, you lost $1.11. We'll take a look at when we look at the balance sheet. We'll see what kind of impact this kind of burn on the cash side has had. Now, we have diluted more shares as they've had to raise money. We'll take a look at the debt as well. So here's the all-important balance sheet. When you're struggling like this company is kind of, and the industry that they're in is struggling, that's probably even a better way to put it. Well, you want to take a close look at the balance sheet. So we've got our assets here. We've got cash and cash equivalents and short-term and other investments. That's basically cash as well. You got 21 and some change, almost $22 billion in cash. Last year we had closer to 25, almost 26 billion. Actually, this was at the beginning of the year. So we are still burning off cash on this one. We've got some receivables. Those are up. You actually like to see that. Unbilled receivables, those are up as well. So this is all good. Inventory as well is up a little bit. You like to see that, especially if demand comes back. They have the inventory in place to meet some of the increasing demand, which we believe is probably around the corner. We'll talk about the backlog here in a minute. They actually break that out in another slide. Now, total current assets, basically flat from the beginning of the year, but we talked about this all-important cash is starting to bleed out from the company a little bit. Long-term debt went from 61 down to 57, but short-term debt, this current portion went from 1.6 to 6. So it appears that this debt just kind of rolled over into like a current position. And so that's what I see there. Maybe a little bit was taken off the top there. Now, all important cash flows as well. So we've got our 3 months ended here back in 2020, 2021. We pull down these pretty dismal net income numbers, although not necessarily as bad as it potentially could be. And we roll through. We get to add back in share-based expense, depreciation, things like that. And then we get this net cash used in operating activities. Boom, we burn through $3.3 billion, which is about what we saw burn off the cash line on the balance sheet. Last year, we're sitting at $4.3 billion. So while that is an improvement of about $1 billion, it is still nowhere near where Boeing needs to be in order to continue to not burn through cash. And so you'd like to see them turn this around very, very soon. Now, they've been able to tread water. How come? Because they have new borrowings here. So they had 9.8 in new borrowings. Then they had these debt repayments. They're basically kind of, refinancing, so to speak, on these types of things. They had some proceeds from investments here, contribution to the investments. So they got some money back through these investing activities, and they were basically a wash from the financing side. This is why we saw cash kind of burn out from the business. In fact, about $689 million for the last year or so. And so things are not that great at Boeing yet, but when you take a look at this is like the interesting slide. So they've got their business segment data. So we got the 3 months ended here last year and this year. We got commercial airplanes nowhere near where we were a year ago. That should make you actually excited as an investor, because not only should you have, business and leisure travel come back at some point, well, then it might come back in a big way and really could help commercial airplanes. The defense sector is fine. It's a very steady business. It doesn't matter who's in office, doesn't matter the party in office. Defense spending and security tends to just continue to go forward and trickle up, and Boeing is a major benefactor of that. So you got some global services here as well. And all things being considered, we've got our total revenues here. Now we've got our loss from operations. It's showing you that they're not quite profitable here on this $4.3 billion worth of commercial airplanes. So if we can continue to tick up that revenue, we should become profitable there. Defense and everything else is actually a pretty profitable business. You like to see that. Now, the other thing that I wanted to show you, they show you the commercial airplane deliveries. They're obviously still delivering these 737s, but they've got these new planes that are still just not yet really being delivered that much. And so you'd like to see that. Now, here's total backlog. This is probably the key segment they actually lead with the press release. So I know it looks buried here in the financials, but they actually lead with this number. It's like one of the first things they talk about at the top of this press release. So it's important. You know that the company wants you to think it's important, and I actually do think it's important. It's total backlog. Commercial airplanes. Look at this number. Is this 282,000? Is this 282 million? No, these are in millions. This is 282 billion. $282 billion worth of backlogs in commercial airplanes. Hello, that is a fantastic amount of business that you have just waiting there for FFA kind of clearance, and obviously commercial airlines and those types of things kind of getting back to normal. This is a ton of just runway that this company can go down once things start getting back to normal. Now, do you want to wait? As an investor, here's the question you want to ask yourself. Do you want to wait for the runway to kind of open up and for the air traffic controller to say, hey, you can come on down, Boeing, and everything's good. Your new 77 MAX plane and all this other stuff is ready to fly. People are vaccinated. People can fly. Well, who knows where the stock price will be at that point, okay? You have all this potential business, over $300 billion worth. I just showed you in a quarter. Okay, in a quarter, this is a company that's not, I don't want to say not doing that much business, but this is $15 billion, $16 billion, okay? $300 billion of backlog business is a lot, a ton. That's like years and years of business. So I love that. The other thing that I want to talk just broadly, really quick, before we get over the stock chart with Boeing is competition. Okay, this is a company with virtually no competition. Okay, I know, yes, I know Airbus is in the competition, but there's almost nobody in the commercial airline business that competes with Boeing. And people are like, oh, well, maybe somebody will emerge. No, look how much trouble Boeing has had launching a new plane. Okay, this is an expert. This is somebody that's been doing this for decades. Look how much trouble they've been launching these new planes. It's been very, very difficult. You think somebody new is going to come along and be able to not have the hiccups and the missteps that Boeing has? I don't think so. And so this is a company with almost no competition and a backlog of business that is years long. Yeah, I like this stock, honestly. Okay, now here from a stock perspective, I got a big wide view here. I just wanted to show you. We made highs up here in the 350s, 340s. Okay, that's over $100 where the stock is now. The stock bottomed out here like 90 something dollars, made a nice rally up, went all the way down. Now we've made a nice rally again, but we're starting to see shares pull back. So this is actually a critical level, right at the 230 level. And, you know, we're sitting right at 234 on this one. We peaked here at 234. The stock went down. It was acted as kind of resistance and support here, a little bit of both here at 230. And it was the same here as well. And so 230 is a critical level. If the stock holds this 230 level, we're in a shorter term downtrend on this one, okay? It has made lower highs. We did the same thing back here, back in December and into January, okay? We made a nice little downtrend all the way down to 195, and boom, you rallied up to 270. So I think a similar thing could happen with Boeing. We could be in a downtrend. If we don't hold 230, my opinion, you have stops along the way at $10 increments. So you got to stop at 220, you got to stop at 210, you got to stop at 200, you got to stop at, we'll call it 190, okay? And I think you could pick up shares, in my opinion. This is actually where I'd like to pick up shares of Boeing, in this box here between, we'll call it 190 and really where it's at, 230. So I wouldn't necessarily be really aggressive at the 230 level. What I'd want to look for is a reversal. Okay, what's a reversal? A higher high. Okay, so we've made a high here at 242. You'd like to see the stock bounce up to in the 245, 250 range. It'll probably pull back at that point. As long as it doesn't pull back below that previous high and then starts this kind of sawtooth move upwards, then we should have some kind of reversal. You see a similar pattern kind of emerge here. Once you got above the previous high of about 211, once you kind of chop through that area, well, it was off to the races. You went from 205 up to about over 270 on that. That's a big move, okay? So you can trade Boeing. You can be a buy and hold investor. You can do options. There's lots of things here with a stock like this. When you have this much room above it, when it comes to all-time highs, and on top of that, from a fundamental perspective, you've got the sector coming back potentially, and you've got a gigantic amount of backlog in business, and you have basically no competition. All these things add up, in my opinion, to a pretty darn good investment. So you got to time it right. You've got to pick your levels correctly. You want to also do your sizing correctly as well. If you're on a small portfolio, $230 shares is going to chew up large portions of that. So you either want to do fractions of shares or one share at a time. If you're on a larger portfolio, I still think you want to size this one correctly. Decide how much you want to put into Boeing, $1,000, $2,000, $10,000, $20,000, and start, picking the shares off little by little with the hopes of, number one, we're going to probably get back to 275 on that one. That's $40 over where this one is at. And then look at all this green sky. We could bolt on another $100 per share on this one. This could be a wildly profitable investment for many, many years to come. Now, I know it's struggling today, down 3.5%, but year to date and over the last year, this thing has been ripping higher. I think this is a kind of the buy the dip type stock. Leave me a comment down below. Do you agree or do you disagree with this one? Hopefully you guys enjoyed this video. We'll be back with more again very soon. Good luck with your investments.